Thank you for tuning in. What you're looking at is the TexasVestments.com website About Us page, an investment club here in Dallas, Texas, detailing who we are and what we do. I'm the club president, Lee Ennis. In this video, we'll detail what we're currently invested in, why we've invested, and what our outlook is for the market. Hope you enjoy and learn something. All right, and happy December. So this month, we're looking at Thomson Reuters, still a buy for us, but with this number still being positive, it means that we'll lose money on buying more. So we're going to hold out and see what happens. Still decent position, still down based on the European numbers from last quarter. Hasn't really recovered much. So we're going to wait and see if we get a bigger dip, or if this thing is going to catch up to its price last quarter. Everything else is pretty stable. Rogers is getting really close to a sale. Same thing with American Electric Power. ExxonMobil has come back with the price of oil, and OPEC has done some cuts to restrict a little bit of oil, so that made oil go up a little bit. Exxon went up with that. Coca-Cola is performing fairly well. Been in this one for quite some time. There is a little bit of profit on it, but this huge commission number is what keeps us from selling right now. Pfizer, we actually don't have much of this, only 3 shares right now, but that price is somewhere around 36 right now. GE, we have a buy signal on this. It says big negative number. Lets us know that we can actually make some money on buying more of this. Currently, the system says that we should have 44 shares. We currently only have 25, so what we may look at doing is doubling the number of shares to get close to what we're supposed to have. This number is the amount over or under allocated to this stock. So right now we're under allocated by $409. So we are in a good shape to purchase some more of this stock and get it at a cheaper price. Right now we got GE at $21.57 and price is about $17.80. So we're happy about that. Annaly, again, we're waiting on interest rate talk, see how that goes in December, to see what happens with this thing. It has come back quite a bit. I think it's up to about 11.80 now. So just kind of watching it, waiting on that 10% dividend we have coming with those guys. Weyerhaeuser is doing fairly well. I'm really shocked that we don't have a sale on this this month, because it was up to 36 and I think it's come back some, so it's probably right on the cusp of giving us a sale order. TD Ameritrade, got into that one last month. It's doing fairly well. It's up a little bit, but definitely don't have a sale on it. Seagate has performed very well for us over the years, and we have a sale on it, so we'll look at some possible replacements in the technology sector. Let's take a quick look at what has happened this past month. And so I'm going to look really quick at the basic sector for December 17. And let me get rid of some of these. I always end up opening them up again because I like to see the previous year. There we go. All right. Down a little bit. Consumer cyclicals way up. And that's something that I knew was coming, because they have been performing not very well lately. Defensive stocks looks like they're way up, and that says a lot. It's hard for me to say that the market is turning bearish, being that it's hitting new highs, but with the defensive stocks jumping up as high as they have, Makes me wonder what's going on. I'm going to take a look at some of these here and just see what this is. Altria, Target, Walmart, SYY. Don't know a whole lot about SYY, but my goodness, look at these, man. And these are staples. I mean, this is those old, boring companies, Procter and Gamble, Target, Walmart. Walmart's performed really well this year. Um, it's up what 855. That's a big number. 14 last month. As a group, 4%. Let's see what's next. Energy slightly down, hasn't moved much at all, which is surprising, being that the oil prices have gone up, but maybe not. It's only happened recently, so maybe this average is catching most of the month where oil didn't move much at all. So we'll see maybe next month if those numbers get up there a little bit. Financials are down, and we'll see what happens again in December with interest rates. Also, the tax bill that's due to be signed and put into action in December is going to affect these financials for January as well. And based on their prior performance, I'm going to expect these things to do really well in January. Let's see. Well, I shouldn't say in January. I should say for the rest of the month of December. Um, Health stocks down slightly. Industrials pretty much flat. Real estate has come up some. That's good. Tech has taken a huge drop. I mean, it's been performing very well over the past couple months. And looking at it, looking at the numbers, doesn't look like it. Just past couple months actually. So it's had a couple good months, and now it's come back. And just looking at the previous history on this thing, looks like that's what's going on. It'll have, see this, 2 or 3 good months, and then down, way down November. Couple good months, and then flat, and then down. So um, we'll see. We'll take a look at what the heat map shows us. And see what's going on with tech. All right, telcos are up a bit. I wonder who did that. We got 9 and 8%. That'll definitely do it. These guys were at 3, 9, 8, 3, and 2. Wow, AT&T, Verizon. So um, it hasn't happened in quite some time, and it looks like it's really just a bounce back from uh, how it performed last month. Of course, these guys just horrible. My goodness, it's a short if I've ever seen one. Yeah, and then it's 3 and 2%, I believe, are our Canadian cousins. Yeah, Tullis in British Columbia. We're actually in Rogers is what we got in last month. It's pretty much flat. Hasn't really done anything. Looks like it really uh, shot up with the rest of the guys a couple months ago, but it's pretty flat right now. Utilities flat. All right, let's take a quick look at our heat chart here. And let's see what's going on. Where's the market going? So let me freeze top row here. All right, looks like the dividend portfolio performed the best, which is very defensive. Typically, it means that people in the market are getting scared, and the market is due for a drop. And as we see, going back over the past 12 months, um, this portfolio hasn't performed very well at all. And all of a sudden, just out of nowhere, it's up 12% for the month. That says something. So, just looking at this first corner here, I mean, those look pretty green to me. Let's continue looking. We got some greens. This one did really bad. Dividend beta and up. All right, I got 6% there. So this one's kind of choppy. It looks like most of the green, most recently, lies around these areas. So this is the return, which makes sense because there's been a lot of buying, but these are darker green and a lot of red thrown in. So I gotta stay away from that. That looks pretty good. Beta alpha return. It's really hard to say. This general area, sort of green. That's why I hate those. The beta return, alpha beta down. So these are all beta plays, which means they perform well when the market is down. This area is somewhat green to me. This is up and down, up standard deviation, down standard deviation. And really, standard deviation is, let's see what the average is on that. So that's a negative average. It's about flat. Then the average on this one, same thing, flat, slightly up and down. Let's see. It's kind of brown. These look pretty good with the exception of that one. That's up. So again, a beta play. Past couple months, average is 1.5 a month. That one is flat. This one's done horrible. Standard deviation, flat. So that's a decent run. That's okay. That's horrible. So, looks like the best performing portfolios. Let's take a look here. At 25, 2, 3. It's up 3. Negative, flat, negative, negative, negative. 2, 2, 3. Wow. Oh, there's a 5. There's a 7. Looks like that 7 is going to be my highest. Yeah. So 696. And right before that was 5 and change. And that is our down and standard deviation. And so again, these are stocks that don't move down as much as the rest of the market when the market is moving down. And then standard deviation is a measure of volatility. So these companies have the least volatility. And then up standard deviation are companies that move up when there's a lot of volume. So those are the best performing companies for the trailing 12 months anyway, so far. And I think that says a lot to the whole volatility thing. So let's go back and take a look. If I looked at strict volatility, it's flat. If I look at up moves, it's 1%. Alpha is flat. Beta and return has been the best over the past 4 months. So we'll take a look at what's in this portfolio and go from there. And beta return simply means that these are companies that perform best when the market itself is going down. Doesn't have anything to do with volatility. But there's also return in there, and these are companies that have historically returned the most on average on an average month. So, a little bit of defensiveness with some alpha thrown in. Let's take a look at what's went on last month. Looks like tech fell the hardest, then utilities, and actually the basic sector fell. Well, no, basic is here. Yeah, they fell a little bit, not a whole lot. It looks like tech and basic, they're definitely utilities fell the most. So I'm going to take a look at what companies are in those sectors to see if we can find a breakout stock. Also looks like health and telcos are rebounding pretty big. Real estate is continuing up from their big drop down here. They're continuing to climb. So that's good news. And then looks like our defensive stocks are again continuing their climb up. So the question is always, do we search for what has dropped the most to find our next pop, or do we go with what's working? In the past, I have always gone for what is really cheap, a good company that's poised to go up. So let's take a quick look. I like this one visually, just to see. Let me zoom out a little bit. Just to see month to month what the gains and losses were and kind of where they were. And it looks like for the month of November, it was really hit and miss. I mean, you have this portfolio that went way up 6%. This one over here is almost 6%, almost 4%. Beta return, dividend alpha, and of course the dividend over here is way up 12%. I have to find out which dividend stock climbed that high. CTL, ETP, NLY, NRP. Let's take a look here. Get rid of that one. Okay. Let's go back, look at this. CTL, ETP. CTL. Yeah, CTL did horribly. ETP. And let's see what that does. Energy. ETP. ETP horribly. So it's got to be something in here that just ran screaming. See, NRP is a basic. Let's go up here to our basics. NRP is only 162, so that's not it. Seagate, BX. Let's check BX. What the heck? No, horrible. OMI. OMI is a health company that I really want to get my hands around, figure out exactly who they are and what they do. They're an MVP, but I don't know a whole lot about them. So that's not it. GE, SO. Philip Morris, I bet. That's that defensive. Let's see, LB and SO. Let's just check that real quick. LB. You're not going to give it to me. Let's go up here and look. LB. There we go. Victoria's Secret. What else? PM and SO. See what PM did. PM. Where are you at? There we go. No, that wasn't it. And then SO is the utility. Not horribly. So it was all L brands, So I'm gonna look and figure out what happened with L brands. They have been a stock that no one has liked a whole bunch. I've kind of been following it because I mean it has been getting beat up really bad, and I stayed away from it simply because it's a store. Everything's going online these days, and maybe they got their online stuff together. Who knows? We'll take a look and see what's going on. But that is the reason for that big jump in dividend. So I wonder if the same thing also happened with return too. Anything that has L brands in it. Let's see. Nope, there's no L brands in that one. So that means the returns actually did well. Dividend and alpha is up. Beta return. Beta standard deviation. Return standard deviation. Beta return standard deviation. Beta return alpha. Beta alpha dividend. Alpha standard deviation. Return standard deviation. Okay, so in looking to over the past couple months, alpha standard deviation. Yeah, it's really hit and miss. But it does appear though that the market seems to be going for the beta plays. So that's where we're going to look at staying, especially if we're going to replace the technology stock that we're holding. So let me take a quick look at our technology basket of goods. Let's see what our options are. Intel, there's been a lot of talk about Intel. Seagate is where we are. Looks like Cisco went really high. Same thing with Qualcomm. Cisco has been on the VIP list a couple times. And look at these averages. My goodness. This is good. So Intel's actually performed the best. Cisco is a very close second. Actually, no, I don't have this thing sorted properly. Hewlett Packard, then Microsoft, then Texas Instruments. But as far as what's been on the VIP list, these three guys. Alright, so let's take a look at a number of these, and also L brands.